So looking at Donald Trump and the impact he's having on the world, particularly with regard to global trade and increasing tariffs, we don't see this as a major problem. In fact, if anything, it's a bit of a benefit. What it means is companies around the world will start to increase their stockpiles. If you're a US company, you are going to increase your inventory levels in anticipation of more local demand. If you're in China, okay, it's possible you might decrease your inventory, but the local policymakers are improving the local environment. They're elongating the quantitative easing that they've had in place for some time and putting in place measures to keep those companies growing. So for us, the impact of tariffs and trade barriers, that serves to increase local premiums, but doesn't necessarily mean it's a big negative on our sector. I think we've reached a point where actually it hasn't been so much free trade, it's been unfair trade. China with quite onerous tariffs and the US with very low tariffs. Now I think things are being rebalanced. That's not necessarily a bad thing to help European and US manufacturers to recover. And I think that's generally good for commodity demand all round. China has moved to support credit markets locally to help local companies. Yes, there will be a negative impact on Chinese company earnings, and that has knocked the Chinese stock market. And that had a knock-on impact with the United States and with our own major markets. But that was short-lived, and actually, in reality, UK, US manufacturers should do a bit better as a result. So if we go back to where the trade war thing started with Donald Trump, it was all about looking after the US steel industry, and of course in Europe, the European Union tries to look after the European steel industry as well. China was going to flood the Western world with cheap steel and continues to overproduce on steel because it struggles to pull back its steel production. Steel production, particularly in China with the blast furnaces, uses a lot of coking coal. This is typically produced by Rio Tinto, BHP, Glencore. They're the big producers of it. But it's not a huge part of their earnings stream, and the prices haven't particularly collapsed just yet. This is still relatively good. So although there'll be less, I don't think there'll be any greater demand for coking coal going forwards as blast furnaces get pulled out of production. I still think it's going to be a fairly robust market for them. So with the ongoing trade wars and Donald Trump causing trouble around the world, we do expect US industry to carry on doing well and US growth to be strong. Companies that might benefit from that are Sunrise Resources, which is producing perlite that goes into cement and concrete. In Nevada, we've got Phoenix Global in Idaho, and we've got Strategic Minerals, which is producing magnetite for sale locally within the market of New Mexico. So three companies there that I think will continue to benefit from US growth.